And in this video, I'm going to be delivering a major warning for Bitcoin. Yes, I'm not a bear. I've had a lot of comments saying, oh, are you being bearish? No, I am bullish this market, but I have to be cautiously optimistic. That is my theme right now. And if any of you guys have been looking yesterday, I shared with you the important details around what we were seeing. And today I'm going to be showing you something major around correlations with traditional markets. So make sure you stay tuned to the very end. We're going to be going through some important metrics. Remember, yesterday we covered off the fact that liquidity is starting to drop. If you haven't watched my video on the great liquidity reset, you need to watch yesterday's video because we go through all these charts in detail. You need to understand what's going on because it ties in perfectly with what I'm going through today. And you can see the price action. We're going to go through the key levels on the price as well. Make sure you smash up likes. If you're going to trade in these moves, you got to check out Bybit. Links in the description to trade with Bybit. Now, as you can see here, yesterday we spoke about the fact that this move was nice. Nice move, retested the line, but you saw we did not go and get the higher high. We're seeing weakness in the Bitcoin price here on the 4-hourly. That does pose a potential risk for us to fall to the downside. We're now below our 4-hourly EMA ribbon. Remember, I spoke yesterday about the notion that I want to see, can we get down to our daily EMA ribbon, potentially giving us opportunities to buy around that 29,000 mark. Maybe we don't get there exactly, but remember, 29,000 is this green line. Now, of course, the liquidity crisis is going on. In a few hours from now, we get the FOMC minutes. Later in this video, we will touch upon what to expect from the FOMC minutes. Packed video here for you guys right now. If you appreciate the fact that I'm doing this while I'm traveling, make sure you support me. Look at this, guys. This is the spot price correlations. And for the longest period of time while I was making content, as the price started falling here on Bitcoin from 69,000 downwards, what did we notice? We noticed that crypto was heavily correlated to traditional finance. We were looking at the dollar index. We're looking at the NASDAQ. We're looking at the S&P. And we were using that smartly to dictate what was going to happen next for Bitcoin, because every time the S&P and NASDAQ were falling and the dollar index was climbing to the upside, we could predict that Bitcoin was falling, and it helped us navigate that path all the way from 69 down to 15.5, right? We saw it coming because we could see the levels and therefore we could time our buys. Now, what we're seeing here recently to start off the year was a very big decoupling. We've seen a huge decoupling, and that has come to lead to our correlation here falling to almost zero. Look on the right-hand side here, guys. If you take a look at the 90-day correlation with Bitcoin, Ethereum is correlated 0.81. Remember, 1 is a positive correlation, means they move in the same direction. But look at the rest. Look at gold. We're not correlated, 0.1. Look at the S&P, 0.08. It's flat. Dollar index, 0.1 to the downside. We are not correlated in the last 3 months here to Bitcoin. Now, this decoupling is powerful. It means Bitcoin's finally unleashed. It's ready to go and do what it wants to do. As we get closer to this halving now, which is less than a year away, it's now got the shackles unleashed. It can go on its own journey. And this is what a lot of people were waiting for, because in bull markets, Bitcoin does its own thing. You do not want it correlated one-to-one with traditional markets. That's not the point. Bitcoin needs to do its own thing. All coins need to do its own thing. So this is good that we're starting to see a lack of correlation. Now, you can also see that this is the first month, June, which has just finished, where we've seen a notch up here in the monthly spot volumes on exchanges. You can see here a lot of the exchanges now starting to pick up to the upside, and we're seeing a good inflection point here, but still plenty of work to do. Right? Those towers there are nowhere near what we were seeing even in Feb and March this year in terms of trading volume. So, this is all summarizing the message that I want to be cautiously optimistic. Yes, there are things that are moving in our favor. There's no doubt about it. The spot Blackcoin ETF is a great step for us, and it shows that BlackRock are interested, they mean business, and that there's a potential path here for mass adoption into cryptocurrency, soon. But at the same time, there's risk. Right? At the same time, $5,000 to maybe $7,000 on the price of Bitcoin out of the $30,000 is probably just priced in because BlackRock have filed an ETF. So if we get a hard rejection, you can imagine the kind of fall we'll get to the downside. And even worse, a rejection on BlackRock's ETF could actually be worse than if we never had a filing in the first place, because it could almost leave markets feeling like we're never going to get this ETF, right? It could be a real huge blur. So we've got a lot going on right now. You've still got the Fed tightening. They still want to crack on with their job. We're going to get the FOMC minutes later on today in a few hours. We will be looking out for any clues around how many rate hikes are we going to get. Is he still going to be hawkish? Remember, these are the FOMC minutes from the previous meeting. It's not news, from the previous meeting where they decided to pause, but maybe in there we're going to get clues about, oh, we're still going to keep rate hiking the rest of the year. That could spook markets later on today. So there's a lot going on. We need to be cautiously optimistic, and tying that back into the charts, it's exactly what the charts are telling us too. The charts are telling us that yes, it's good, right? It's good that we've managed to work our way from where we were down at 15,500. We worked our way back up. This is a lovely move on Bitcoin, right? No doubt about it. If we look at this from 25, boom, all the way up here. but there's room for a pullback here. We need to be ready for a daily pullback at the very least down to 29,000, maybe even 27,000. And then when you zoom up to the weekly, you start to see that even if we want to pull back into our weekly EMA ribbon around this level at 27,000, it's okay. Right? We'll still be maintaining an upward trend. So yes, there's a lot of euphoria in the market. I'm also bullish. I want people to think that I'm not bullish. I'm in the market. My positions are locked and loaded. Like, I want to be taking part in the big cup and handle pattern, which can take us up towards 45,000, right? There's no way I want to be missing out on this move here, which takes us to 45,000 on the cup and handle pattern. No, why would I want to miss out on that? But at the same time, I'm not going gung-ho. I'm not chasing green candles thinking, oh no, this is going straight to the moon. No, there could be a lot of volatility ahead. Liquidity crunch. Go watch that video from yesterday. Right? There's no liquidity in the market. Yes, we're seeing spot volumes flow in like I just showed you, but it's not crazy volume here. This is not crazy volume. Yes, it's ticked up from May, but it's not crazy. Where's that liquidity going to come from? If the Fed's hoovering up all this liquidity, where do we expect it to come from to, skyrocket the Bitcoin price? So to summarize, I'm there, I'm optimistic, but I'm cautious. And that's the way you need to be, guys. Don't follow the sensations to say Bitcoin going to 100,000, jump into all your altcoins right now. Don't follow all the people that say, oh, don't worry about it, it's going to go down to 10,000. Keep it realistic, keep it rational, and that's going to get you through this period. Now, whilst I give you the bullish situation that this can move up to 45,000, I'm also going to share with you the bearish situation, right? If we get rejected from that neckline, it'll be the second time we hit that neckline. We ran up once, came back down. Ran up twice, came back down. What risks does that pose, guys? For those of you who are familiar with the patterns, which you can learn from my TA course, charles.uk/TA, learn all these kind of things so you can spot them and have an edge in the market. Take advantage of that. Link will be in the description. And you can see we're forming an M pattern. An M pattern is a reversal pattern, rejection pattern. So we're fighting for it right now. We're carefully poised. We're either in a reversal pattern, which is cup and handle, boom, off we go to the upside, or we're reversing an M pattern, which can send us to the downside. It's like do or die right now, bears versus bulls. This is where we're going to decide if we're ready for our next bull run. So I certainly wouldn't want to be out of the market right now, but I wouldn't be gung-ho. Nice and patient, waiting for pullbacks. As those pullback comes, I'm looking to DCA. Can I get in at 29? Can I get in another buy at 28.5? Can I get another buy at 28? And that's the way I'm going to cautiously add to my portfolio here over this next period of time. If you appreciate these updates, even when I'm traveling, guys, smash up likes. Don't forget to subscribe. Check out the link in the description to Bybit, charles.uk/Bybit. That's where I'm making my purchases, guys. That's where I'm buying my Bitcoin. That's where I'm adding to my positions. That's where I'm looking to make my trades. Join us over there. Thanks for watching, and I'll see you in the next one.